Hey team, a while ago I made a video about Giddy, a token that had launched recently from a Salt Lake City startup aiming to make DeFi easy. I've mentioned them several times on this channel, and things were going great for a few weeks, not so much anymore. It's been a roller coaster, and we're overdue for an update on Giddy's staking, so here we are. Quick recap, Giddy is a startup making a mobile app a la Coinbase or Robinhood, but totally focused on making DeFi easy. There are several reasons I really like this project. The team is doxed and out in the open. They are, by all appearances, reputable and established characters with extremely low likelihood of disappearing with the funds. They're building a real product with a real use case. They have institutional investors. All of this gives me confidence in the project in the long term, and we will come back to that point later, but the app is not launched yet. What is launched is their token, which went live near the beginning of April. I didn't buy in right away. I was at the Miami Bitcoin conference, and then I came home and I had kids' soccer games, and then Easter. Life, you know? But a friend persuaded me it was worth taking a closer look, which I did, and I started to chip in. And right away, it proved profitable. To paint the picture, Giddy was, and still is, streaming 1.5 million Giddy tokens every day for a full year after launch, straight to the liquidity providers who have staked into their protocol. Those who stake Giddy or the Giddy USDC pair are rewarded at a much higher rate than those who stake other tokens. And this makes total sense. If you want people to hold on to your token, incentivize them to hold on to it by giving them more of that same token to hold on to. When the token launched, it shot up from whatever arbitrarily low number it began at to about 14 cents. That's where CoinMarketCap shows it's starting. When I got in sometime later, the token was worth about 25 or 26 cents. And for the next couple weeks, it bumped around sideways, not really dramatically going higher or lower. But because there were so few people staking, the rewards were really surprisingly good. I did the math, and when I started staking in the Giddy USDC pair, the daily return rate was over 2%. Now, it quickly dropped, but still 1.6, 1.7% daily? That's bonkers. I did the math again, and if I harvested and restaked once daily, assuming about a 1.5% daily interest rate, my principal would double in almost exactly 30 days. There were a lot of assumptions baked into that, and trust me, we will come back to that later. Now, this whole time, there were fewer than 1,000 people staking, and even as I write this, that number has not really gone up very much. This team is not trying to pump their backs. This is not some new dog coin. And if you believe in the project for the long term, that's a good thing. The team is building real utility, and you're still early, as was I. So my percentage take of the 1.5 million daily Giddy tokens being streamed every second right to the token holders was really good. There was a bit of time there where I was making much more than I had ever made in any salaried job I've ever had. The Discord was, and still is, very active, and sentiment was up. Guys, I was sitting on top of the world. I was making money not just measured in dollars, but measured in Bitcoin. I mean, remember, the most recent general market top was in November. I've been slowly buying sats along the way since then, but my stack has not grown rapidly, and in dollars, it's been down hard for months. But now I was making dollars, lots of them, and my portfolio measured in Bitcoin was up significantly. After a couple weeks, I made the previously mentioned video about how to stake Giddy, and I increased my position as the getting was good. Then around May 10th, the price shot up from about 26 or 27 cents to about 33 cents. And this looks like the confirmation of a trend. I mean, look at it. We start at about 14 cents, build up into the 20s, overshoot to 31 cents, fall back down, bouncing around the mid-20s, and then back up to 33. Look at that and tell me if it doesn't look like a trend line to you, because it sure did to me.
Little did he know that this simple, seemingly innocuous act would result in his imminent death.
What? What? Hey! Hello? What?
And you see this miscalculation, that one hurt me, because that seeming trend line prompted me to move more of my portfolio from Bitcoin into Giddy, and that's right when things turned south. Look, hindsight is 2020, and I know we're not in alt season right now, but this was looking and acting like something that could resist the general downward trend. While UST and Luna were crashing and burning, and there was mayhem in the crypto street, and Bitcoin tanking along with them, Giddy was just mostly moving sideways and paying strong staking rewards. The rewards were so lucrative and the token price trend seemingly a sure bet to go up. The Giddy team was speaking at Permissionless in Palm Beach, Florida soon, and surely people there would want to learn about Giddy and buy in. I figured it would take just one modest whale to move the price north, and then all of us little people, we weren't going to sell. We were early adopters and early believers. This seemed like a near guaranteed way to rapidly increase the value of my portfolio. And for a minute, that was true until it wasn't. I don't know what caused the breaking point, but a couple weeks ago, things started to head south. Now, I'm only talking about the token price. Nothing has changed about the fundamentals. The team is still at work. They still have most of their capital that they raised earlier this year. All of the reasons that I stated for having confidence in this project, all still true. But I have now learned a hard truth, that in a bear market, the fundamentals, they're not going to save you. If everything is going down, then over enough time, your favorite token du jour will also go down. See, I had tricked myself. I had looked at the contract and seen how few people were staking. It was barely over 1,000. And if you looked at how many were engaging with the contract on a daily basis, which you had to do if you were going to harvest and restake your rewards, it was less than half of that. So here are roughly 500 people who care enough about this project to show up and engage in any given 24-hour period. Surely this group of early adopters, this band of brothers, surely they wouldn't sell. We wouldn't sell. Early adopters are early believers, right? Right?
We happy few, we band of brothers, for he today that sheds his blood with me shall be my brother. Be he ne'er so vile, this day shall gentle his condition.
Upon St. Crispin's Day!
Well, no. Here's the truth. A couple lessons learned, if you will. Lesson 1, you're not insulated from the market. You're not. Unless you're some kind of self-sufficient hermit living off in the woods. If you hold any kind of investments in the broader market, you will feel the swings. Let's suppose for a minute that I was right about those 500 to 1,000 early adopters. Let's suppose that they are real believers in the token's utility and ultimate value. Let's suppose that they want to hodl forever. But these are also living, breathing people with actual needs. They have to pay for rent and mortgage. They have to put food on the table. They need to pay for transportation to get to their job. They have to take their family on that annual vacation so their wife and kids don't get mad at them. If the broad market turns down, there are real-world consequences that have to be grappled with. Maybe a few of those 500 people lose their job. Maybe an inexplicable war in Europe, of all places, drags on way longer than anybody thought it could and has direct impact on the prices of oil and, God help us, food. Maybe some of those people who thought they'd hold their favorite token forever were halfway through a home refinance, but the appraiser told them that they had to repaint their windowsills, and then the next day it snows, so they can't repaint the windowsills, and the appraiser won't sign off on the paperwork, so now they can't submit the paperwork, and with interest rates going north, now their mortgage is going to be more than if they'd submitted that paperwork just days earlier. So when the market turns down, that means that income goes down, that means that costs go up, and these early adopters and early believers, they still have to pay for life's necessities. When items lower down on Maslow's hierarchy of needs are going unmet, it doesn't matter how much of a believer in the future of some investment you are. You need to pay for life today. That's lesson 1. Lesson 2, we can tell ourselves all kinds of stories all day long, and they can make all the sense in the world in our heads. But until those stories have come up against the cold, uncompromising reality of the light of day, they don't mean very much. I was absolutely sure that the token price was going to go up after the team spoke at the Permissionless conference in Florida. It just made sense. Cool project, cool booth, cool team. Surely people would jump on board. Everybody in the Discord seemed to agree with me. But it didn't happen. And I don't even think the Giddy team did anything wrong. We just misread the situation. And as it turns out, all of us getting hyped in the Discord, we probably pumped the price up. The app is not live. They weren't trying to drive a ton of users right now. There's nothing brand new to announce. So no new users, it was just a conference, and then it was over. When I made my previous video about Giddy, I said you could double your money in 30 days. At the time, that felt like a rather conservative estimate. There were definitely people in the Discord who got in earlier than I did and made more money in less time. But as I said earlier, there were a lot of assumptions baked into that projection. One of those was the token price. And when the token goes from 30 cents to 5 cents over 2 weeks, you're not going to double your money. Anticipating this exact follow-up video, I set up a demo wallet that I use to harvest and restake every day. In my real wallet, I harvested and restaked way more often than that, but again, I was being conservative. There were some days that I missed, and my apologies, but in the end, it didn't make any difference. 1 month ago, I moved $1,000 into the Giddy USDC liquidity pool. Once a day, I harvested and restaked into that pool. About 2 weeks ago, my $1,000 had grown to almost $1,600. It looked like I was going to surpass my modest double your money goal. Then the token price crashed, now down almost 80% from its all-time highs. That staked amount is now at just $815.99. By the time you see this, it'll be slightly more. Look, it's not a huge loss, but it's also not doubling your money, which I was really hoping to do. The good news is that in my real investment, not this test wallet, I did take profit along the way. I did put funds into the USDC pool and the wrapped Bitcoin pool, which both proved to be very good choices. I sold almost my whole position in the Giddy pool, but not the Giddy USDC liquidity pair. I'm still very optimistic for the long-term prospects of this token. I'm just hoping, fingers crossed, it recovers before Bitcoin rallies, because when that train takes off, I do not want to miss it. The big takeaway here, my friends, is humility. No matter how high you're flying, hang on to some humility. You're going to need it later. That's it for today. What do you think? Is Giddy a smart move in the long term? If it's going to recover, when will it recover? And when will the market generally recover as a whole? What will drive that turnaround? Let me know what you think down in the comments, and we will address it all in a future video. Thanks, team.